we want to provide that clarity and create a platform and room for everyone to ask questions so as not to make mistakes as our daddies and mommies, our retirees make their choices when it has to do with program withdrawal or annuity, as the case may be. So real quickly, we have more time to talk, but let me quickly hand over to our regional manager. Yeah, Mr. Larry is going to speak to us now. A very quick welcome or opening remark before our guest speaker takes over from here. Please, if you're a retiree, you can also do well to just, put your name in the comment section so we can recognize you specially. And, we'll be able to take it from there. All right. I'm going to ask our regional manager to speak at this time. Please kindly unmute and speak, sir. We're glad to have you, sir.
Okay. Good evening, everyone. Can everybody hear me?
Loud and clear, sir.
Okay. Sorry, I will not be able to on my video somewhere. I have another meeting that I need to give attention to by 8:30, so I'm actually preparing for that. But there's no problem. Let me say good evening, everyone. I want to welcome everybody to this webinar, and this is going to be the first edition of it that we are going to have, and after this one, the subsequent one is going to be great. So I want to believe that we have retiree on this call. So if you have retiring on this call, even though those one who are about to retire, you have them on this call. After this webinar, what they don't know about annuity, they will get to know about it. Maybe before now, they have been looking for this kind of opportunity. They will not be able to get it, but this one we make them to know what they need to know about annuity, and they'll be able to know the difference between program withdrawal and annuity, so that they'll be able to have the best choice on how they can have the best access to their pension. So this is what I'm going to say. So let me just hand over the platform to Emmanuel to continue from there. Thank you very much.
Thank you so much. We celebrate you, sir. We appreciate your time. A round of applause. If you can, everybody, if you can use the emojis and just celebrate our manager, our regional manager. Thank you. We appreciate your time with us briefly, though. We greatly appreciate. So we're going to move on into the business of tonight. And we have a very special guest. He's a very senior manager in the agency. And he is, he has several years to his bag in terms of all that has to do with the subject matter. Please join me as I make welcome one of our able managers, Mr. Peter Edo, to speak to us on the subject of program withdrawal and annuity as we educate and enlighten all our retirees and soon-to-be retirees. Mr. Peter, the floor is yours, sir.
It's all right. Yeah, good evening, colleagues and retirees in the house. Can everyone hear me clearly?
Yes, we can.
It's all right. So first of all, I want to greet everyone for making out their time to join this webinar where we are going to have an interactive session about the Nigeria pension industry. But first of all, I want to find out, do we have any retiree connected to this webinar? If we do, can you please kindly indicate via the chat box so that we'll know how to go about these engagements this evening? Do we have a retiree in the house?
Yes, we do. I'm sure of a couple. Yeah, we do. So they can type their names.
It's all right. So it's all right. So I appreciate that. So briefly, I'm going to quickly, first of all, talk about Heirs Insurance Group, so that our retirees in the house will have a full assurance about the company they intend to entrust their pension into for management. Heirs Insurance Group is a member of Heirs Holding, and Heirs Holding is the umbrella company that is responsible for the financial backup behind Heirs Insurance Group. As at this morning, because it will be good for us to understand the global coverage as well as the financial position of Heirs Holding within the insurance industry. As I was saying, as at this moment, Heirs Holding is one of the fastest growing digital insurance company in the world. And it does not only operate within the Nigeria territory, it has gone globally. On record, we have already started operation in 4 continents that cut across over 24 countries. On estimate, the global financial portfolio of Heirs Holding as at today is put at $16.2 trillion. So that has made the chairman of the group, Mr. Tony Lumelu, to position Heirs over every other insurance company that is presently operating. So with that financial backing and the first technologically inclined insurance company, it has put us at an advantageous edge over every other insurance company. It's like our mission statement that talks about empowering youth and transforming Africa. We are actually doing that by rendering financial services. Apart from financial services rendered by Heirs Holding, the scope of their investment also cut across real estate, hospitality, power and energy, oil and gas, in addition to healthcare. So our transformation of the globe cut across the major sector of the economy. The reason why I did this brief overview is for our retirees to know how robust Heirs Insurance is. And with the backing of our major stakeholder, which is Heirs Holding, we have the full assurance that if you commit your pension with Heirs Insurance, you have over 100% guarantee. Now, going straight to the business of the day, annuity. But before then, we are going to briefly do a brief overview of the Nigeria pension industry. Then thereafter, we'll talk about the 2 pension options, that is how annuity operative hedge over program withdrawal. Now, briefly, I will take everybody's side to after Nigeria was liberated from the colonial master, that's after we got independent. The pension system that was operational then is all referred to as the old pen. Can please kindly indicate?
Yes, we can hear you, sir.
It's all right. So as I was saying, after the Nigeria independence, the pension scheme that was being operated is known as the old pension scheme or the defined benefit scheme. Simply put, what that pension scheme means was that after those that works in the organized public sector retire from service, there's a provision from government that they are entitled to what we refer to as gratuity, whereby they will be given some bulk money for the settlement as the case may be, and thereafter they will also be paying them their monthly pension. In fact, the idea behind that particular scheme was that the retirees will earn their pension for life. And for retirees that were in that old scheme that are still alive today, they are still earning their pension. Although that old scheme make provision for a 5 years guarantee pension. Then coming to 2004, in fact, prior to 2004, the government noticed that there were some bottlenecks in that old pension scheme. For example, normally when retirees retire from service, for example, those that are in major cities like Lagos and Abuja, they return back to their villages. Now, so one of the major challenges was that after retirement, they were expected to go back to their areas of service for what we refer to as annual verification. Some of the retirees could not meet up with that because it was so stressful. And according to the government, any retiree that could not come for that verification exercise, it is deemed that the retiree is dead and the pension will be stopped. That is one. Then there were other politicians that were using that pension scheme to enrich themselves. So the government decided to say, okay, this time around, since there's a whole lot of corruption in this system, we are going to privatize pension so that it will be in the hands of private individuals that will be able to manage it efficiently. So that was what gave birth to the contributory pension scheme in 2004, whereby the house have to come up with a law that regulate pension in Nigeria, and that law is what referred to as the new Pension Reform Act of 2004. Now, in that new Pension Reform Act of 2004, what it simply means is that it gave birth to all these private pension managers like Stanbic IBTC, so that they will be able to enroll retirees, register them, give them a unique pension number known as RSA PIN. As they are working, they will be deducting some amount from their income and be remitting to the RSA. Then there's also some percentage that the government will also be remitting to the RSA. That after they retire from service, in fact, the condition that that particular act spells out for retirement is that they must have spent 30 or 35 years in service, or they must have attained 50 years. With anyone that comes first. That's in section 7, subsection 1, A, B, and C of that particular act. So the pension managers were enrolling people into the scheme, and such contributions were being made. Now remember, there were some that were already working in that defined benefit scheme. There was also a provision for them that after they retire from service, they will embark, before they retire from service, they will embark on what we refer to as a verification exercise, so that the government will be able to capture them and calculate their work entitlement when they were in that old pension scheme, add it to their present contribution with their present pension manager. So, for example, if Mr. Okoro was in the old pension scheme, he worked for like 10 years, and now come to the contributory pension scheme and he work additional 25 years. So the government will calculate his entitlement when with the old pension scheme for that 10 years, add it to his present contribution for the 25 years he has worked. The total money on that account, according to that act, is entitled to what we refer to as a lump sum. Then thereafter, the balance is what he will use for his pension benefit. Now, in that 2004, when that act came into being, the only pension option that was available is what referred to as program withdrawal. In fact, remember, in the old pension scheme, the idea is that pension is supposed to pay retirees for life. So when the contributory pension scheme was built in that 2004, the government also foresaw or envisaged that it will pay retirees their pension for life, but they never knew that there will be some bottleneck or some challenges. For example, it was a reducing balance. In fact, as the name implies, it's a pension plan that will pay retiree for an expected lifespan. Or put conversely, is a pension plan that will pay retiree until the money on that account is exhausted. So the government never foresaw all this bottleneck. The plan started rolling. As they pay retiree mod 1, mod 2, mod 3, it is being deducted from the principal. And so there will be a shortfall. That was one of the bottleneck. Then secondly, remember, as I mentioned, that on that old pension scheme, there was a provision for a 5 years guarantee period. But in this contributory pension scheme, the government now make a provision for a 10 years guarantee period, which implies that after the retiree must have successfully completed his legal work in service, then whatever amount that is on his account, they've calculated a lump sum. Then the remaining amount that is left will be spread for 10 years. I also say that balance will conveniently pay the retiree pension for 10 years. Let me put it in figures so that our retirees will be able to understand. Let's assume that Mr. Ebuka retired from service. Both his contribution and the accrued from the government is 20 million naira. Now the government pays the retiree 10 million naira. We are saying that the government is saying that the remaining 10 million naira balance should be able to conveniently pay Mr. Ebuka his pension for 10 years. That is the guarantee period. Now remember, I mentioned that there were a lot of bottlenecks. And what was one of those bottlenecks? Retirees on that scheme that fall asleep before the expiration of that guarantee period of 10 years, when they fall asleep in debt, for the next of kin to get the balance was a very big problem. And what was the major challenge? The law requires, still on that new pension reform act, the law requires that the next of kin will go and get a letter of administrator. And to get a letter of administrator in this country, uses Lagos State as an example, is not an easy thing. Now, let me also use figures so that our retirees will be able to understand better. Mr. Emeka retires with 10 million naira in his RSA. And when he died, he was having like 8 million naira. Now, for the next of kin to collect that 8 million naira balance, the law expects that the next of kin, as assessing that letter of administrator, will first of all pay 10% of that 8 million naira to the probate registry. If you calculate 10% of 8 million naira, we are talking of 800,000 naira. And in most cases, when death happens, members of the families of the deceased are always looking for money for burial. And if they have that kind of money, they will not even think of using it to process one amount in pension. So it was a very difficult requirement. So these were some of the bottlenecks the government foresaw on that particular pension scheme. So in the year 2008, the government of Olusegun Obasanjo decided to say, okay, we are going to review this pension scheme so that it will create room for retirees after retirement. They will retire with style and they will continue to enjoy their pension benefits until God calls them home. And what did the government do? They decided to go back again to that old pension scheme, because that old pension scheme paid retirees for life. They went back to that old pension scheme, reviewed that old pension scheme, and now gave birth to annuity. This adjustment the new pension reform act that now gave birth to annuity. That's the provision we have in the section 7 subsection 1C of the act that says that when the retiree retires after they paid him his lump sum, the balance left in the RSA account, that he can also use it to purchase annuity as a pension option. Now, let's get this fact clear in mind that both program withdrawal and annuity is a pension plan from the federal government. Some people will say annuity is an insurance plan. No, it's a pension plan from the federal government. Now, what are the benefits of annuity? Because honestly speaking, this engagement is not to demarket program withdrawal or to give more. No. We are going to highlight the features of these two plans. Now, remember, when I mentioned, I said that program withdrawal is a pension plan that pays retiree for an expected lifespan. What about annuity? The simplest definition is transfer of risk of longevity to an insurance company to bear. Or simply put, is a pension plan that pays retirees pension for the rest of their life. What it means is that Mr. Okoro retires at the age of 60 and he still lives additional 20, 25 or 30 years. While program withdrawal will pay Mr. Okoro until the money on the account is exhausted, which could be 8 years, 10 years, or even 12 years, annuity will continue to pay Mr. Okoro for the rest of his or her lifetime. That is just the beauty of it, because pension is supposed to pay retirees for life. Now, what are other benefits? At inception, annuity pays higher than program withdrawal. The reason is because, remember, the insurance company company are risk bearers, and the normal calculator used by both PFA and that of the insurance in calculating their monthly pension is not the same. The calculator used by the insurance company is always higher than that used by that of the PFA. So that is one other benefit that makes annuity to have a competitive edge over program withdrawal. Now, there are categories of risk that those on program withdrawal bears. Remember, I mentioned that annuity involve the type of risk of longevity to the insurance company to bear. Now, for program withdrawal, the retiree bears that risk of longevity on his own. What that means is that a retiree retires at 60, and his lifespan after retirement still have about 20 more years, and the pension stop may be between 8 to 12 years. So that additional risk of longevity of not getting payment will be borne by the retiree on program withdrawal. Now, there are other categories of risk involved. For example, there are hidden charges that those on program withdrawal will bear on their own. There are some charges that the PFA, if you have your statement of accounts, I will employ you to kindly check it on your own. You use the Stanbic IBTC, Power Pension, any other PFA. You go down at the last page of your RSA statement, you see some disclaimers, some things written in tiny figures. If you check it closely, you see those risks. There are amounts the PFA will deduct monthly. There are amounts they will deduct annually, and those amounts is placed on percentage. There are some amounts they will remit to National Pension Commission. There are some amounts they will remit to the pension fund custodian. All these amounts are placed in percentage. Now, the government is saying that on program withdrawal, the deductions that will be deducted from a retiree's account is placed at 7.5% average, because those deductions will tell you is being regulated by a National Pension Commission. If you remove 7.5 from the principal, it becomes a lump sum. Now, let me use like 5% so that we understand. A retiree, when he started program withdrawal, has like 10 million naira. And the law says that every year, 5% statutory deductions leave the accounts. If you do 5% of 10 million naira, that gives you 500,000 naira. And with 10 million naira on program withdrawal, the retiree can earn between 85,000 naira as monthly pension. If you do 85,000 naira multiply by 12, we're already talking of, let me just say, now draft 50K. You have now draft 50K, which is the annual pension, plus the statutory charges of 500,000. We're already talking about 1.4 million naira. Now, if the return to the retiree's investment, because the investment is being traded in Nigeria Stock Exchange, if the return to the investment is not even up to 1 million naira in a year, there's already a vacuum of about 400,000 naira. That is the depletion we are talking about that makes it a reducing balance. But on annuity, there are no hidden charges. You as a retiree, you have all those risks to the insurance company to bear. That is one of the greatest benefits retirees on annuity enjoy. Now, there is also this issue of economic downturn. So when the economy is bad, as a result of maybe inflation, bad government policies, like when the COVID came in, in addition to during EndSARS period, a lot of investment went on a program withdrawal is also affected, because when the economy is bad, the retirees in one bearing the risk of shortages that is accrued to his RSA on his own. For an annuity, those on annuity, whether the economy is bad or not, they don't have anything to worry about. The insurance company continue to pay them for life. Now, still on this annuity, there is now a provision the government made that makes it to be very, very transparent. That's the issue of the regulatory bodies that ensure that the system is transparent and very, very efficient. Like on program withdrawal, we only have one regulator, which is PENCOM. That is the part of pension. But come to annuity, we have three regulators that regulates the annuity pension. We have PENCOM, you have NICOM, we have a Security and Exchange Commissions. So This body put together makes the annuity benefit for retirees to be so mouth-watering that retirees that have heard about annuity decide to always let their friends as well as their neighbors or other colleagues to also join them in this benefit. Now, let's go back to the issue of a next of kin. Remember, I mentioned that when the retiree on program withdrawal dies, the next of kin need a letter of an administrator to get it. Now, in a situation whereby the next of kin is not in the country, because there is a case like that is still pending as we speak now in Edo State. A retiree uses his beloved son as the next of kin, and the next of kin is trying to find a greener pasture in Europe and is trapped between Europe and Africa, and the retiree died. Other members of the family went to the PFA to go and get the balance. On checking the retiree's portal, they discovered that the next of kin whose name appears was not among them, and they asked, where is this young man? I said he's on his way to Europe. You know where the problem is now? The PFA is saying that since he's still alive, he will have to come back to Nigeria to process the death benefit. It's a very difficult thing. In fact, when a retiree on program withdrawal dies, it will look as if grains of corn or maybe groundnuts is locked in a transparent bottle. You are asking a cock or a hen, the one they normally call a cook, to eat that grain inside a transparent glass bottle. It's not possible. That is the way it is on program withdrawal. The next of kin, even when it's available, it will be seeing the figures in black and white, but to access it is very difficult. So as I was saying, going back, the young man is somewhere in one of the African countries. They are saying until he comes back, he cannot process the death benefits. But good enough on annuity, it becomes a way to members of the family. When the retiree is underwriting the annuity, he at the same time enroll the names of all members of his family. So much so that when he passes on, just one of the beneficiaries can process the death claim benefits. So which makes an annuity to become a will to all members of the family. So there are lots of benefits that annuity has over program withdrawal. So this is why this engagement is very, very important. For our retirees that are connected to this platform this evening, we appreciate your connection as well as your patience. I also want to let you know that life before retirement can be very juicy, but this is time whereby you have to understand the two options better, so that at the point of your retirement, you can make a better decision. Because life after retirement, when someone makes a wrong decision, is a very, very difficult thing. We've seen cases whereby after retirement, you see the level at which a retiree will emaciate because of making wrong decisions. And there are lots that is involved in pension that is not known to the retirees, and the PFA will not like to disclose to you. So for more other engagements, I will advise that any retirees connected to this webinar can still revert back to whoever it is that invited him or her for more clarification. So because of time and your patience in listening to this conversation, I would like to draw the curtain here. But at the end of this curtain, we also welcome questions, because I believe that as I was talking, retirees connected were able to note some areas that they might need clarity. So we welcome questions so that we also provide the answer. And before I cut it off, there's this area I almost forgot. Let me quickly chip it in. In the question and answer that is being issued by PENCOM and NICOM, there is a case of when a retiree's fund is exhausted and the retiree is still alive. What happens? Retirees connected here now, please have it in mind that for those on program withdrawal, when the fund is exhausted, there is no court of law in this country that you can take a PFA to. Say my fund don't finish. No. because the reason is that they were not being registered by the government or empowered by the government legally to pay pension for life. So that is why there is no court of law in this country that will be able to fight on behalf of a when their fund is exhausted. So let me leave the floor for questions that will come in. So Mr. Emmanuel, over to you. Thank you.
Thank you so much. Please, a round of applause for our very senior manager, Mr. Peter Edo. Thank you so much. Please, if you can, everyone, kindly help me celebrate our manager. It was an awesome delivery, super awesome. And I believe that our retirees and everyone here, for that matter, even those planning for retirement in a couple of months or years from now, are able to get some level of clarity. Thank you so much, Mr. Peter. Yes. Okay, so yeah, so we're going to take questions, and I believe that some of our retirees here have questions. Whether you're already on program withdrawal or you are still considering which option to get into, the floor is, now is the time. So you can just, use the hand button and indicate, and I will call you up quickly to ask your question. Okay, please let us know so we can call you up quickly. I see we have a few persons. Mr. Ojo Olakunle, is a retiree here. Thank you. Please let me know. Please kindly unmute your mic and let me know if you have difficulties unmuting your mic. Then I will make further adjustments to the settings. Then I have in the call 2 more persons who I believe have questions they'd like to ask. I have Mrs. Akin Bogun and Mrs. Babarinde. Apologies if it was not pronounced properly, but so we can have your questions at this time. Please, somebody should just unmute and try to speak. Let me be sure that is not muted permanently for everybody. And if you cannot unmute, let me know. Meanwhile, you have a question, you can go ahead and ask. Why that is coming up, Mr. Peter, I believe we have some of our very senior managers in the house who may like to, make an input or two. Maybe you can just, okay, good. I have Mrs. Mary Ogu, about to retire. Mrs. Mary, do you have a question? If you have, you can unmute your mic and ask. We'll be glad to answer. Or if you prefer to type. Okay, so we have a question in the comments. Someone said it is still muted. Okay, I'm going to work on that right now. Meanwhile, while I do that, there's a question here, Mr. Peter. Please remember, Mr. Peter, you can ask some of our senior managers here to add their view and then make their inputs as the case may be. So the question is, what determines if a retiree can receive 50% or 25% lump sum? How true is it that program withdrawal will accept 2 next of kin? Okay, so please, I have that question in the comments. Okay, Mrs. Mary says she doesn't have any question. Okay, good. Okay, Mr. Peter, you can go ahead.
It's all right. Let me respond to the questions one at a time.
Yeah.
The first question is what determines if retirees can receive 50% or 25% lump sum? The answer to that question, the new Pension Reform Act of 2014 review, in that section 7, subsection 1A, made a provision for a lump sum withdrawal. But that lump sum withdrawal was not specific, whether it's a 20, 25, or 50%. Now, in practice, please, let's pay attention the way it works. When you are going for your verification, they will request for your last 3 months pay slip. Now, in line with what that act says, it says that a retiree after retirement should be able to earn at least 50% of his or her basic salary as monthly pension. Now, what it means is that if a retiree's gross is 250K, if you check their pay slip, there is an amount that corresponds to the basic salary. It could be 150K as the case may be. Now, a retiree whose basic salary is 150K, the law is saying that after retirement, he or she should be able to earn at least 50% of that 150K. If you do 50% of 150K, is 75,000. So they are saying that at retirement, you should not be able to earn anything below 75,000 naira. Now, what the PFA does is this: whatever amount that is on the RSA as a total RSA, they will first of all determine what 50% will be able to pay the retiree as monthly pension. I repeat that expression. They will first of all determine, because you are going to submit your pay slip, they will be able to determine your basic salary. From your pay slip and from the total RSA, they will determine what 50% from the total money in your account can give as monthly pension to you. After they determine that, they will separate it from the total RSA. Whatever balance that is left is what they are going to pay to the retiree as lump sum. So that is why sometimes when you see 2 or 3 individuals retire from service, spend the same years, the same age, their lump sum will differ. It could be 25%, it could be 30%, it could be 41%. In some cases, it can even be 51%, depending on the volume of the RSA and the date of birth of the retiree. So that is the determination of the lump sum. So there is no strict jacket law that says retiree must earn 25%, he must earn 50%. Previously, when a retiree is above 60, they pay 50%. But presently, what obtain now, that is what they do. They will determine 50% of your base salary, remove it from your total RSA, whatever is left will be paid as lump sum. So whatever 25% can give, they will keep it as your monthly pension. So that is one. Then the second question is, how is it that program withdrawal will accept 2 next of kin? That information is not correct. It's not correct. Reasons be that in PFA, on program withdrawal, as you are completing your form when they were registering you, is only one member of your family that you provide as next of kin. Next of kin, according to their explanation, means who will be the first person they will contact when something happens. As they are putting next of kin, there's also a provision where they put beneficiary. So whoever it is that the retiree indicates is the person that will get that benefit. But the answer to this question is that it's not possible for a retiree on program withdrawal to use 2 next of kin. The law made provision for just 1 next of kin. I don't know if that answers your question. I'm trying to check the name of the person that provided these 2 questions.
Okay, I think
I can see
clearly the answers. There's one more, Mr. Peter. Thank you so much for the answers already.
Yeah, I'm going through the question. Say, okay, this one say glad to have been a part of the webinar. So I think that's okay. The other question say how easy is porting from
that should be moving from one PFA to another.
From a PFA to another is okay. The law also make provision for, because whatever thing involving pension is contained in the new Pension Reform Act. Now, what the law says about moving is very, very simple. It's not difficult. A retiree can move from PFA to another PFA within 1 year. So there is a period referred to as a transfer window. So during that window period, a retiree can move from PFA. So what the retiree needs, say for example, the retiree is with premium pension and he wants to move to Stanbic IBTC pension. he or she should approach Stanbic IBTC pension and provide his details. And what are the details? His or her names, as well as the PIN number, RSA PIN number. You give it to Stanbic IBTC, they will recapture the retiree. The moment they recapture the retiree, they will send information to premium pension. The premium pension is under obligation, legal obligation, to transfer the fund to Stanbic IBTC. So the law is saying that any retirees that wants to move from PFA to PFA, he does not need to go and first of all have that discussion with his existing PFA, because if he wants to move, he's already dissatisfied with the existing PFA. He will go to the PFA of his choice that he's moving to and let them know that I want to move. The request for those information, they will recapture him or her, and the movement will be done. So if he's going, he should go with a white background passport photograph and the NI slip, and possibly the birth certificate or affidavit for age declaration. It's seamless. It's not difficult. I'm seeing another question. I don't know if there's any senior colleague that can also chip in so that because I know there are senior colleagues connected. I can see Ibrahim as well as others. Or do I continue?
Okay, yeah, I mean, maybe Mr. Ibrahim can come up. I can see Mr. Ibrahim. Thank you, Mr. Ibrahim, for joining on the call. Mr. Ibrahim is one of our senior managers.
Mr. Julius, our agency manager, also a top manager, is also on the on the call, and Zekiah Iyan is also on the call. So those are some of our senior colleagues. But let me quickly take this one so that if there's other questions, they can take it up.
All right.
Now, there's this question that talks about.
Good evening, everyone.
Good
Can you hear me? Good evening, everyone.
Glad to have you, sir.
Yeah, thank you very much, Mr. Edufika, for the wonderful presentations. Thank you very much. May God bless you. Yeah, I don't really have much to say. You have said a lot about what Annuity is all about and what Program Withdrawal is all about. As we all know, that Program Withdrawal, the kind of pension scheme that is administered by the PFA, Pension Fund Administrators, to pay retiree for unexpected lifespan. What we are always saying is that what we really understand by expected lifespan. We human beings, we have expected lifespan. Else, likewise, any other animals, like even mosquitoes, they have expected lifespans. So when they are telling you that they pay you for an expected lifespan, that means what begins must end. So if they pay you for 10 years, highest 15 years, they are going to stop monthly pension. That means when you are under program withdrawal. But when you are under annuity, which is administered by registered insurance companies, you understand, they pay for life until the person dies. You understand? So one of the advantages of annuity, like I have a case of one retiree that annuitants that I did a death claim some few months ago. You know, the beneficiaries were able to get to, you know, the available balance on the RSA balance. But in the case of program withdrawal, it's not like that. So annuities serve as will for all retirees. In the case we have retirees in our midst, you should know the importance of choosing annuity over program withdrawal. So annuities serve as a will for all retirees to pay retirees for their lifetime until they die. You understand? But when you be with the PFA, you bear the risk on your own. You understand? When somebody die on that program, we don't, in the case of any unforeseen circumstances like death, we don't pay for something like that, but it will definitely happen. When somebody die on that program, before the beneficiary can take the remaining balance on the RSA account, you need to submit what we call letter of administration from courts in the absence of what? Of will. But annuity is not like that. Once you sign up annuity, it's just as if you are writing your will already. So if anything happens, the remaining balance will pay to the non-beneficiary. Annuity is the best, pension schemes which the parties which is administered from registered insurance companies and those countries that practice annuity, UK, Germany, Russia, China, and that is what we are also practicing here in Nigeria. So thank you very much for your attention and for your wonderful presentation, Mr. Edepika. And for the retirees in our mix. So I want to ensure you that you choosing annuity is the best pension schemes for you. Ever. Yes, thank you very much. God bless you all.
Okay,
Yeah.
thank you, Mr. Ibrahim. Thank you so much. So we have a question from a retiree. One of our team members, Lady T, invited Mrs. Akinbogun. I can see Mrs. Akinbogun. Her question is on the chat. It says, good days. By the way, you can unmute the mic and speak if you like to speak directly. But if you want to type, you can also type. So Mrs. Akinbogun says, thanks so much for the enlightenment. But can't 50% of the money pay to the retirement? Mr. Peter, can you look at that and see if you can respond?
Yeah, even before that question, a question from one Cynthia Anyara. Although I've responded via typing, but let me elaborate. He said, please, does Annuity also give enhancement? See, on the issue of enhancement, it does not apply to all retirees on program withdrawal. In fact, what the circular enhancement says is that it can only apply to those retirees on program withdrawal whose RSA has accumulated some marginal increase. It's always the case of like if you put 10 retirees on program withdrawal, maybe like 1 or 2 will have increments. Now, since the introduction of the contributory pension scheme in 2004 till 2025, that's after 2 decades, it's only just 4 times the government has done enhancements for few retirees that it applies to. And once your pension on program withdrawal be enhanced once, it cannot be enhanced twice. So, but on annuity, retirees' pension is enhanced from inception. Let me give you an example. There was a case of a retiree that was on program withdrawal that was earning 17,000 when it started. So when they did the enhancement, it was just a little marginal difference of about 700 naira that was added. When the woman later moved from program withdrawal, even after receiving enhancements, the monthly pension was about 27,000 naira. That is the power of annuity. Remember, when I started, I mentioned that the normal standard calculator used by insurance company calculating their monthly pension after factoring in their date of birth, RSA, as well as their as other factor is always higher than that of the PFA. The truth is that the PFA investment is always speculative. It's always speculative. The risk attached to it. In fact, if I go into that area, I'm talking about portfolio theory. They refer to their category of investment in Nigeria Stock Exchange as a volatile investment. Any business that is under that condition of volatility is under probability that it might make gain, it might make loss. That's why for those that are using Stanbic IBTC, go and check their statements. There is a disclaimer they make that past performance is not a guarantee for future performance. It's a direct disclaimer. So that is why they cannot enhance all retirees on program withdrawal. So for those on annuity, their pension is enhanced from inception and the salary for life. See, even the idea of annuity, it makes sense to rational and reasonable retirees. A situation whereby a retiree has like 10 million naira as RSA and his monthly pension is with 10 million naira, he can earn up to like 125,000 monthly. At the end of the 10-year guarantee period, he has exhausted the principal with returns. He has earned like 13 point something million naira. He brought 10 million, he has earned additional 3 point something as return to the investment. And we are still saying that even if it lives additional 10, 20, 30 years, it continues to earn the same pension. In fact, on our platform, most annuity platform, it is indicated that they are going to pay the retiree for 100 years. The question is it possible for a retiree to live 100 years after retirement? So that issue of enhancement, retiree's pension annuity is enhanced from inception. I don't know if that clarifies that question. Then the other one said, good day, sir. Thanks very much for the enlightenment. But can't 50% of the money paid to the retiree, that's after retirement? It's like I've explained that one just now. The way they use to calculate the lump sum is when they determine the 50% of the basic salary when the person was in service. So whatever 50% can pay as monthly pension after retirement, they will separate it from the RSA. Whatever amount left is what they are going to pay as lump sum. It could be 50%, it could be 40%, it could be 35%, it could be 51%. But they will ensure that whatever 50% of your basic salary can, they will first of all safeguard that of your monthly pension. So the rest is what they will pay as lumps. That is why it's always good. We always advise those that are about to retire. It's always good if you have like 1 year, 2 years, or 3 years before retirement, take up a saving plan so that as you are retiring with style. You must have been able to accumulate some substantial amount of money so that even when your lump sum come, it becomes an addition, especially this time around now that Tinubu government no longer pays arrears. As you are retiring, you are getting your lump sum. Previously, you retire, they will pay like maybe 1 year or 1 year and 6 months arrears in addition to your lump sum. It brings it up. But this time around, it's not obtainable. So for any potential retirees that are engaged here, that are about to retire, maybe they still have like 1 year, 2 years, 3 years, even 5 years before retirement, this is the time you have to take action. You have to engage in a discipline saving, cut down your costs. I know a lot of you are on a cooperative. Cooperative really does not help. It's an instrument whereby a lot of retirees borrow money, and even when they've completed a cooperative, will still be deducting. So it's not really paying. Like for Heirs, who have a discipline saving account that whoever it is that refer you here can explain more to you on how you can accumulate money before retirement. There's still another question. I'm seeing a lot of questions. At times, retiree use PFA giving enhancement as a point of argument. How does one tackle that? I think I've handled that. Under annuity, how is monthly income determined for a retiree? Good question. It is determined based on RSA. On the template that they are going to give to the retiree, is going to indicate everything about the retiree's pension. His total amount as RSA, final RSA, the year at retirement, the amount they are going to give as lump sum, as well as the amount they are going to give as monthly pension. And some PFA will also indicate the annuity premium. So it is that annuity premium that the insurance company will use to determine the monthly pension. But as I've mentioned, in all cases, annuity pays higher than program withdrawal. I think that's the last question I have here.
Okay, so we'll take maybe 2 or 3 more. Thank you so much, Mr. Thank you so much, Mr. Peter. Can you hear me, please?
Again, for those already under program withdrawal, what they need is to state in their current RSA statement, you will see the current value. If the current value is 5 million and the monthly pension is 30 months from that 5 million, because it is what the government says, you set 1 month pension aside so that during the period of processing, the PFA will still pay the retiree that 1 month pension. So if you remove 1 month, it is the balance that annuity. Now, for those on program withdrawal, there are some amounts we refer to as accrued interest that will not reflect on the first whatever return the retiree that point when they are moving to an annuity that will end that accrued interest. If it's monthly pension on program withdrawal, as I said, is 35,000. As they transfer the remaining to our PFC, any amount in addition to that 35,000, the accrued interest. But if they are on program withdrawal, they will end up depleting that money. So for Mr. Emeka, let me quickly give response to your question. So are you saying that PFAs are the people that determine long? PFA determines it. They have their table that they use in determination, because when the retiree wants the pay office goes to, so they request for basic information. Okay, say please note that Mrs. Mary is about to retire from a private company. I invited her, thank you. Okay, for that, in the case of private, it's even sweet, it's even faster. Once you've collected all your documentation and evidence from your company, and in your templates, they will indicate the amount they are going to pay you as lump sum. It's still the same process I've said. The fact you are retiring from private does not mean that your lump sum will be different from those that work in government establishment. They are still going to determine 50% of what you were earning. But based on the new law, if the money you are having in your RSA, so say after they remove your lump sum, the balance cannot give you 1/3 of the present minimum wage, which is 23,333 as the case may be. They will pay you everything as en bloc. So if they remove your lump sum and they notice that the balance can at least pay you an amount that is higher than 1/3 of the minimum wage in Nigeria, you are entitled to pension. So it's still the same process.
Okay, thank you, Mr. Peter. Sorry, my network is acting up. Yeah, so, but I mean, the responses are very valid. Thank you so much. Deeply appreciated. So we have like 5 minutes or less to call it a day or a night and adjourn this session. For all our retirees who are here, Mrs. Ogunshola, we celebrate you. Mrs. Akin Bogun, Mrs. Babarinde, Mrs. Akin Bogun, Mrs. Babarinde, and Mr. Ojo is here. Mr. Ojo, thank you for coming. He was invited by one of our agents, Blessing. Mr. Ojo, please kindly unmute your mic and let's know if you have any feedback or any questions whatsoever, if you will. Okay, if Mr. Ojo can hear me, please kindly unmute. If you will, we would like to get a feedback or a question. Okay.
Thank you so much, sir.
Okay.
I have to attend because I promised I would be in this meeting.
Awesome.
Unfortunately and painfully, I do not belong to any of the classes that were discussed this evening. I left paid job for a very long time ago, before the new RSA PENCOM situation. But at least I am informed. If anybody of colleague, friends who are still in the paid employment now talk about annuity, talk about lump sum, I think I can give a few information to help them to know what to do. And like you have said, for anybody who is looking forward to retirement now, 3 to 2 years in advance, you should start preparing and get himself you said a saving account, which I guess your firm is interested in. If you have a saving account for somebody who is not a paid job, but that we can do, then maybe we can talk together. But so far, I think it's a pleasant evening being with you. Thank you very much.
Thank you, Mr. Ojo. Mr. Peter has something for you, right, about the savings. Although he said it a while ago, maybe he will recap. But Mr. Peter, before you just recap and let's close this tonight, I have 1 or 2 questions from my end. Now, if somebody wants to migrate to Heirs annuity, what should they do now? That's number 1. That's what materials do they need and what should they do? Number 2, how long is the process? Is it stressful? Do I need to go up and down, go back, go forth? So what should the retiree do who wants to migrate to Heirs annuity, haven't heard the things we have said so far, then please respond to Mr. Ojo. He has retired he has left paid job for a long time. Does HEB have any plan for individuals who want to still benefit from annuity, who are not in a paid job?
It's all right. I will take the question one at a time. Now, the question to Mr. Ojo, that for individual, it now belongs to, maybe he does his own business on his own. If he has a lump sum, what I mean by lump sum is maybe he has like 4 million or 5 million, as the case may be. I will advise Mr. Ojo to meet up with whoever it is that invited him to this webinar. He will be able to give him more information on how to go about that. All Heirs financial advisors are graded; they are professionals on that. So that is for that. Now, the second question, Mr. Emmanuel, on if somebody wants to move to Heirs annuity, what are the procedure? It's seamless. In fact, the government, National Pension Commission, have make it very, very seamless. Now, for those on program withdrawal, as I have mentioned, what they just need to do is that they should go to their various PFA and get their current statements. I know that in some PFA will try as much as possible to frustrate their efforts. Your pension option is your right. It is your personal decision. There's no pension manager that will force you to belong to a particular pension plan. In fact, in that new Pension Reform Act, it was explicitly stated that any individual or an organization or a pension rendering organization that try as much as possible to give a retiree false information or withhold a document that will enable a retiree to process his or her pension, there is a penalty. The reason why I'm quoting this law is for retirees to know their rights, because in some cases, when they go to their PFA, they will say their PFA say they cannot move. It is your right that any PFA that fails to comply, the penalty could be imprisonment or even a fine that is stated in monetary value or even both. So you get your statement of account from the PFA, then meet whoever it is that is your account officer talking to you. It's like you are opening a bank account. We are not telling you to go and bring the money. Just give us the statement. You complete our form. You give us one passport photograph, your valid ID card, preferably your NI slip. Then your last pay slip, your last month pay slip, and your retirement letter and evidence of age, which could be your affidavit for age declaration or birth certificate. Once you've provided those informations, we generate the agreement for the retiree, for you as a retiree, which you take back to your PFA. Now, according to the law, the processing is not supposed to exceed 3 working days. They will receive it, they will work on it, and they will send your principal straight to the PFC. Good of it is that in Nigeria, we have just 3 PFC presently. We have a UBA PFC, which is also a member of Heirs Holding. We have a First PFC, which is First Bank, and we have Zenith PFC. So it's seamless. Even for PFAs that are stubborn, that are reluctant to act fast, it does not exceed 2 weeks, they will do the transfer. So that is the second question. Please kindly remind me of your second question, Mr. Emmanuel. I really can't get that.
Is the process cumbersome? Can't go back forth?
Okay, thank you. The process, as I said, is seamless. We've had cases whereby it took a retiree within 2 to 3 days to process the pension. So as I said, it all boils down on the retiree. Once the retiree is convinced this is what I want to do, just go there, get your statement of account and get it done. But for those that are retiring, please, Emmanuel, Mr. Emmanuel, help me to check where the noise is coming and mute the person. So for those that have just retired and want to access it as a fresh pension benefit, what they need is to get the templates. So the difference between those any program withdrawal and those that are just processed for the first time is for those getting it as fresh that just retire, the document they will request for is the template. But for those already any program withdrawal, the document they will request for is statement. So it does not involve go front, go back, go front, go back. A retiree can even process his pension benefit. This is a movement. They can do it online. You don't even need to go to your PFA. If you have a registered email, you send a mail to them requesting for your present or your current statement of accounts. You provide your retirement details, your RSA pin. They send it to you. Once the agreement has been drawn, you forward it to them back line. They are under obligation, as I said, they are under obligation to accept it. So it's not difficult, it's seamless. All right, there's a question. I agree to everyone, sir. The retirement monthly payment is not giving consideration for inflation and social economy. This will put hardship on each retiree for more than 3 years. Please kindly look at the hardship regarding inflation and due living emolument. It's all right. I'm trying to check the name of the person. Akije Isaac. So, Mr. Isaac, I want to thank you sincerely for this observation. So, as I said earlier on, the two pension options are from the federal government, whether program withdrawal and annuity. Although presently the government is doing something about it. The government is trying as much as possible to increase monthly pension with 30,000 naira. So the process is ongoing. There has been an engagement between the National Pension Commission and NICOM, whereby a joint circular was issued. So we are waiting. We await how that promise becomes a reality. But you know, in Nigeria, whatever promises the government make, we just hope that the government that make that promises actualize or fulfill that promises before it leaves power. Otherwise, when another government comes to power, it becomes a political promise. But this government of Tinubu is actually responsive to retirees' plight. So we are looking at how that one becomes a reality, because based on your question, it's going to factor in the present economic reality of that hardship into pension. So that is why it's making plan to at least increase it to 30,000.
Okay, Mr. Peter.
So where do I go if I want to move to your PFA? Now, for clarity, we are not PFA. We are an insurance company. So if you want to move to our annuity pension, as I have mentioned, if you are let me check the name of this person, Miss Fashoyi. If you are already any pension with okay, if you are already any pension with your PFA, get your RSA statement and meet up with the person that invited you here. It will complete the process for you. If you are a fresh retiree about to retire, or you have already retired, you are awaiting your accrued right from the federal government. Once it is ready, get all your documentations from the appointment letter, retirement letter, NI slip, last 3 months pay slip, every of those documents. You submit it to your PFA and request for your templates. Don't sign any document with them. Request for your template. Once it has been given to you, you hand it over to whoever it is that invited you to this webinar. He knows what to do.
Okay, so our time is fast spent. Thank you so much. This session was supposed to be for 1 hour. We have done 1 hour, 25 minutes. So hopefully in 5 minutes, we should close this today. Our next session will be in 2 weeks. So to all our retirees who are here and all our friends who are yet to retire and who are planning for retirement, thank you for coming. Mr. Peter, please, just to emphasize that on the 23rd of November, exactly 2 Sundays from today, we'll be converging again to further dissect this matter and look at it from other perspective and get to understand why some retirees who know that they should be on annuity, but they just are relaxed. Maybe we can just talk about that briefly before we close. Am I losing anything? If I'm on program withdrawal right now and I know I should go to annuity, but I'm just not in a hurry. So is there anything I'm losing? I'll come later, but I don't want to come now.
It's all right. The retiree is losing enough. I'm going to put it in figures so that the retiree will know what he or she is losing financially. If a retiree on program withdrawal has 10 million naira, with 10 million naira on program withdrawal, he can earn at least not more than 85,000 naira monthly. Not more than or maximum 90,000 naira monthly. That same another retiree is on annuity with a principal of 10 million naira. With 10 million naira, that one can earn like 125,000 naira monthly. Now check the marginal difference from 90,000 to 125,000 naira. That's about 30,000 naira. That is dashing to the PFA, that is losing on a monthly basis. Let me even say, okay, 30,000 naira. Multiply 30,000 naira by 12. That is 360,000 naira. Is losing that money on a yearly basis with the PFA. Now, despite the fact that he's short-changing himself, the principal he has with the PFA is also depleting in value, which also put the retiree at a high risk, because it will get to a level that the principal will deplete to. The PFA will also invite the retiree for what referred to as a renegotiation, where it will be a case of reviewing his monthly pension downward. We've seen cases whereby there was a depletion from 18 million naira to 1.8 million naira. Yes, somebody that was earning about 155,000 naira was now earning 18,000 naira monthly as a program withdrawal. So that is the impact, the negative impact it will have on the retiree. Then there's also a case of when there is a sharp depletion. And remember, most of these retirees, they depend on this monthly pension for feeding, sustenance, and buying of drug, so that they will continue having a healthy life. Now, in a situation whereby the PFA break the big news that your money has been exhausted, or even your money has stopped, you don't have anything on your RSA again. I've seen cases whereby some retirees could not survive the trauma, like the case I just mentioned just now of 17 million to 1.8 million. It was a case of a professor in Unilag. Yeah, when they broke the news to him, he could not survive it. He died within 6 months. So for a retiree that want to join the ancestor on time, they are the one that always choose to remain on program withdrawal. For me as a professional, if I meet a retiree that say, I'm not really bothered, I can easily join my ancestor, I will advise him or her to remain on program withdrawal, because when the news set in, there's always a situation of heart attack or their BP will increase. So that is the adverse effects that program withdrawal will have. It has financial effects. It has a negative financial effects. It has a negative economic effect, and it also have a negative health effect on them. But the good thing is that the government say transfer those risks to the insurance company to bear for you. So for you as a retiree on annuity, what you just need to be doing, you'll be charging your phone. Because for Heirs Life, our payments start coming in as from on the 12th of every month. There's one of my annuitants that told me that, Peter, the payment comes so early. Why will you pay me on the 12th before on the 20th I've eaten my pension? So that is the way it is. You'll be charging your phone so that you'll be getting the alerts. So that is it.
That is beautiful. Thank you so much, Mr. Peter. Our retirees are saying we are paying too much and we are paying on time. It's too early. Our payment has been consistent back to back. As a matter of fact, on the 23rd of November, we're going to bring some of our annuitants who are already with Heirs Insurance on annuity so they can share their own experience with us on this platform, how easy or hard it was for them to join the Heirs Insurance on annuity and how frequent the payment has been and the difference between what they were earning when in program withdrawal and now that they're on annuity. And if they have any regrets whatsoever, it's going to be a live black and white session. You ask them real questions and all. I have one of my retirees. He's not even, I've not seen him face to face ever. All the process was online, 100% online. He did not even come to our office. He said, I don't want to come. I don't want to see you, Mr. Emmanuel. Just get this done. And within 3 weeks, it was done. He moved over to Heirs, and then he's been happy for that decision ever since. Okay, that being said, we want to thank every single one. I can see more questions that are coming, but unfortunately, we need to close. We'll be here again on the 23rd of November. Please mark your calendar. Invite all your colleagues in your office, all your friends, all the senior citizens. Tell them that Heirs Insurance has a monthly event twice in a month that holds on a Sunday evening. They should come here and they'll be able to get clarity and, make a decision that is correct and, consider migrating to Heirs annuity because obviously it's the best option for every retiree out there. And if you want us to come to your office, to your place of work or your company, to talk to your colleagues, to organize a mini seminar physically in your office, please reach out to the person that invited you to this meeting. We can quickly arrange for that, and our team will be there and then provide further clarity and guidance for every retiree. Our mission is to make insurance and annuities simple, accessible, and make sure everyone has peace of mind and more from the very moment you retire. Thank you once again to all our guests who are here, all the senior citizens. I see Orisan Yahana Taiwo. Please, we cannot continue anymore. Please, you can also ask the person I invited you. That person is very well equipped to answer your questions. Why we do this is just to be able to provide synergy and reassure everyone that they are in the right place. Okay, thank you, Mr. Ogunshola. Thank you, Mrs. Akimbogon. Thank you, Mrs. Babarende, Mr. Ojo, everyone retiree. Some of us retiree. Mrs. Mary, thank you. Thank you so much. We see you. Mr. Ojo, thank you so much. Some of the retirees don't want to ask. They prefer to type. Some prefer to listen. We celebrate you. I believe you're making up your mind. Please go back to the person that invited you and submit the required documents and let them migrate you to Heirs annuity immediately because you are losing money remaining on the fence. So the best time to make that decision is now. By tomorrow morning or this night, reach out to the person that invited you. In fact, thank them because they have made this available for you for free at no cost. This information will be here again on the 23rd of November. A special thanks also to our speaker, Mr. Peter Edo. He's the senior manager with Heirs Insurance. Very powerful delivery and answers to all the questions. Thank you so much, sir. Thank you, Mr. Ibrahim. Thank you, Mr. Julius John, our agency manager. And thank you to all our team members who are here. Too numerous to be mentioned. We celebrate you. Have a great night rest. See you again on the 23rd of November. 2 Sundays from today. God bless you and bye for now.